Okay, welcome back. You're with us here on Taking Stock. We're looking back and more importantly, we're looking ahead in terms of what you should be doing as we come back on Monday morning. Joining us right now is Mitesh Thakkar with his view on technicals for the week. He also is, of course, going to take our questions which are coming in from you, the viewer. Mitesh, before we pose some of the viewer questions to you, just your quick take. I mean, how are we set up as we come back next week? Good for more on the higher side, or, I mean, is it becoming a bit of a struggle now?
Good evening, Prashant. I think I would possibly, if I was to cast my vote, I would say good for more. We've had a week which was subdued, which was sideways, but the closing was stronger. We also managed to get past the intraday pivots of 10,360 or there. So I think having crossed that level, I think there's a good chance that we might try and attempt the earlier highs of 10,480, 500. That should be the first weekly target for the coming week. And if we start getting past that, I think then you could see some kind of momentum, force and speed built up on the upside. For the timing, I think maintain a positive view unless until we break 10,320, 300 on the downside and use declines to buy. I think that's a good strategy. Be more stock specific given the fact that indices are still showing narrow or upward drift signs, but on a narrower basis. So I think it's just a narrowing range on the upside. And once we get past 10,500, maybe you will see some kind of short covering as well as force on the upside.
Okay, Mitesh, then let's come to trading ideas for next week. What are you working with?
I have a recommendation in Jan Irrigation, which after a long time has started to sustain and close above levels of 110.11. So that's a buy with a stop at 108. 122 should be the first target, though I suspect eventually higher targets could happen. And Apollo Tyres, after a correction, has given signs of a short-term trend reversal for next 5 to 8 sessions. This is a buy. Keep a stop at 243 and look for 272 as the target.
All right, those are sort of recommendations from Mitesh. Let's get some questions from viewers. Twitter user Sohan Mukherjee is writing to us. He's got 100 shares of RBL Bank purchased at 522 rupees. He wants to know what he should be doing with the stock now. I mean, it's basically been between 500 and 530 for a while now after the rally that we saw in the months after the listing. But recently it's not done anything. Mitesh, what would you tell him?
I think, very clearly, if you stretch the chart a bit, starting from, June 2017, which is roughly about 6 months now, the stock is doing range of about 545, 550 to roughly about 490, 480 on the downside. I think that range bound movement will still continue. But I think eventually with time, the stock should start breaking past 550 and that should be a start of some kind of an up move. The minimum target should be then about 600 plus. So I think I would suggest a hold, and if he wants to trade more into it, try to buy it more around the levels of 480, keep a stop below 465, and once we get past 550, 600 about 620 should be a roughly profit target.
Okay, let's move to the next query. This is from Twitter user Tejas Purohit. He has Sun Pharma shares bought at a price of 700 rupees. He wants to know whether he should buy more, average out, buy more, or simply get out. Of course, he's losing money now. Interesting query, actually. Let's get the one-year chart on Sun Pharma. The last time the share was at that level was around March, I think around March of this year, 2017. It's recovered from the lows, but still a long way off his buy price, Mitesh. What would you advise?
Yeah, so I think, in fact, instead of March 17, I think let's go back to March 15 when the stock was at about 1120, 1130 levels, and then we have seen a big correction. I think the stock is more than halved. Now it's showing some signs of a reversal. I hope it sustains this time. It's had some false dawns earlier as well. But I think it looks like that this stock could now possibly get into a short to medium term uptrend. So you can buy more, keep a stop loss below levels of 495, 500. I think that being the support zone. And on the upside, I think as he gets his price down, targets could be roughly around 625, which should be closer to his average price. In case we get past 625, we can even look at 700, 710 happening. But that is something which I'll possibly know in time to come by. For the timing, I would suggest 625 should be your target and try to add it around 520, 530 zones on a bad day when there's some kind of USFD announcement or something like that.
Okay, so let's get to the next one. Twitter user Dhruv Lathia has 1,200 shares of GMR Infra. He basically wants to know if he can hold it for the long term. I mean, the stock, by the way, was up by about 10% or so. There's no price which I think has been given here, but GMR Infra, chartically speaking, Mitesh?
A lot of these beaten down stocks, especially the infra names, JP Associates and GMR, have at least reversed from their lows, which they were trading at about a year and a half back. So in that sense, there's some kind of a medium-term up move going on. GMR possibly would suggest holding on. In case this price is closer to about 24, 24.5, which is my target for this entire up move, which could happen in the next few months, I think that's a good level to exit and forget about it. I don't think there's a big change happening in over here, but after having fallen from 100 plus rupees to as low as 10 rupees, I think it's just a slightly bigger bounce back.
Okay. All right, Mitesh. Really appreciate you being with us, taking all of your questions as always, as well as giving us trading advice. You have a great weekend, and we will see you again on Monday. On that note, Prashant and I will take your leave. You have a fantastic 2 days off, and of course, back with the markets on Monday.
Over the last 4 or 5 years, ever since you had a very loose monetary policy, there's significant amount of inflows to equity markets. Here are some interesting statistics. More than $250 billion have come into emerging markets ever since Fed has a very loose monetary policy. So my opinion is that volatility is likely to increase as interest rates do kind of gradually rise in the developed world, and US is reaching full employment and pretty much reaching its output gap. So some amount of volatility has to rise in that context.
Well, we've got about $70 billion of inflows to emerging market product year to date. It may not feel like a great year for EM inflows to you in India because the positioning on India has adjusted somewhat more negative as people have put a lot of money into North Asia. It's been a strong year for flows, and if you look at global investor positioning generally, they're actually neutral emerging markets in a global context for the first time since 2010. So the extreme bearishness about emerging markets of, let's say, the 2014-16 period, that's definitely gone away.
Quite constructive. I think we are at the cusp of a earnings acceleration in India. For a variety of reasons, it's been pushed back over the last 2-3 years. But this time it's for real, in my view. And so it's too early to get worried. I think we might be at a point in multiples where it's hard to get much re-rating upwards. But we should get strong earnings growth from here, and that should be reflected in returns going forward.
It's been a solid earnings season. That being said, it's not clear to me that FY18 will be a double-digit earnings growth year. We're sticking to our estimate that this is a 7-8% earnings growth year, like the preceding 4. It's FY19, the year to March 19, that we reckon that we could see our first double-digit earnings growth after 6 years. My hope is that credit offtake goes to double digits next year, say 11-12%. And on the back of that, we can get to 14-15% EPS growth in the year to March 19.